Welcome back to the third and final segment of the Loveland Report and Loan Arranger Show. We've been talking about why Florida's economy and real estate is booming while the rest of the nation is in the blahs. What's going to happen when the bombs stop dropping, when they're out of targets over there in Iran? I want to dive into the luxury market this time, Bruce. We talked about rates still in the low sixes, but I think the important thing is getting them, go to your website, get an application in. You can prep them for whether it's a refi they're looking for. Be ready that day when you call and say, pull the trigger.
Yep. We start with a soft credit pull. Yep. We don't do a hard credit pull to get things started.
Or if it's just waiting for the dream house to pop up. I got a couple sellers right now. Actually, they're going to buy before they sell. So they're waiting for the right house. Yep. So we're getting them acquainted with what they want. They got the luxury of not having to sell the old house. And so we're doing that with a couple people.
When you say luxury market, give me an idea. Like, what price point are we starting at?
I think luxury in Central Florida is probably up over 7.
Yeah, because
that's going to be somebody's third home.
7 used to be luxury. Now it's upper middle.
I think you're starting there. I don't know about luxury. Let's call it somebody's third home. Yeah. You know, that not their first time, not their second. This is the one that they want to be in for a while. And then what's funny is used to be $1 million with some lakefront mansion. Not anymore in Central Florida.
So I closed $2 million, $3 million. 3 transactions this month over $1 million and one over $2 million.
Yep.
It was a $3.5 million house. So the prices are up there.
Yeah.
And folks, you don't have to go to your bank. You don't have to go to your private banker for a great mortgage. I've got all the products you need. And if you're self-employed, I'll guarantee you my process is so much easier than your bank's. It will make your head spin. Matter of fact, go to your bank and then bring them all your tax returns, balance sheet, profit and loss statement, and then come see me. How about that?
Watch them not know what to do with it.
They're not going to know.
Yep. So they're going to run away and say, I got to talk to my manager. They won't come back for about 45 minutes. But I want to ask you, Bruce, about on the luxury side, and think about this. Do you think Sleepy Joe gave us high rates?
Yep.
About 4 years ago, they started. Do you think, why did we not get, I remember high rates. I'm trying to think of when, I've been in so long, 33 years. I'm trying to think of when ARMs were prevalent.
Yep.
I think ARMs would have been 90s. Great 4 years ago. We should have had them. Why did we not get them? Because they thought all this was transitory. They listened to the wrong guy.
Yep. That is part of it. Transitory, or it's compression in the market. So what happens is if they don't feel like they're going to get 3 years worth of servicing on it, then they ding you for your points. Okay. Yep. That's on the market. That's not cross country. That's not Wells Fargo.
Yeah.
That's not Citibank. That's across the market, because if they think you're going to pay them off early. So what cross country does is, since we service most of our own mortgages, we have an early payoff that's as low as 6 months, where most banks are 1 year.
Yeah.
You pay them off early, you got a problem. So they're building that in. But there was no pooling of money for adjustable rates, meaning that when it comes to the open market, investing in mortgage-backed securities, there was no buyers willing to jump in the market on adjustables. So the prices for adjustables weren't better. They weren't. I had my client that would buy a $3.5 million house. He's, hey, can I get a little better rate if I go with an ARM? I looked at it and went, I can get you about a quarter point better, but it costs you 1.5 points better to get it.
Oh, wow.
And he's like, that ain't worth it. And I'm like, nope, it's not worth it. Yeah. So I don't believe that adjustable rates are really attractive till you get over 8.5% on a fixed rate. Then they start getting attractive, because you're still going to get a better deal.
Hopefully we're not going that way.
We're not going that direction. Okay. Interest rates are going to stay. I predicted it. I was told in a national conference in Phoenix 3.5 weeks ago that they called me up on stage unannounced and said, what do you think the market's going to do? And I said, and this is the week that it was at 5.99. And they said, I think it's going to drop to 5.75. And I said, I think it's going to go up to 6.2. We were both wrong. It went to 6.4, but they were like, no. And a couple people looked at me like I was from outer space. What are you talking about? Rates are going to go up. And I said, they're going to go up. You watch, they're going to go up. And they did.
Yep.
So when you listen to the Loan Arranger, you're listening to the truth, because what benefit would I have on telling a customer that rates are going to go up instead of go down? That's not a benefit. My competition was all like, rates are going to be great. They're coming down. You know what? They're liars, or they are
This is why you got to be careful.
uninformed.
And you help a lot of people, Bruce, that get the bait and switch. And they say, oh, no, you're going to be at 6.25. Then it turns out they're self-employed and they end up needing a bank statement loan. And you're going through all this. But you'll tell them how to fix that.
Absolutely.
Or say, here's the reason why you should do the bank statement loan. And what are those going to be at, in the 7s?
You can still get a bank statement loan in the 6s.
Really?
Yep. You can do a bank statement.
You impress me every day we work together, my
friend. You
friend.
can do a bank statement loan in the 6s. It just depends on your credit score. It depends on how much money you're putting down.
Okay.
So there's different factors that go into it. But a bank statement loan is going to be a little bit higher. But when you do the math, because here's where a bank statement loan benefits. You make $500,000 a year. Okay.
Yep.
So you'd be paying $150,000 a year in taxes. Fair enough.
Yep.
Okay. But you don't show 500,000. You only show that you made 100,000. So you only paid $25,000 or $30,000 in taxes.
Yep.
Now you can go back and pay the 150,000 in taxes and show 500, or you can go with an interest rate where your interest on that loan may be $4-5 grand a year more in interest than a conventional loan. Would you rather save $125,000 in taxes and pay $5 grand more a year in interest? Or would you rather pay the $125,000?
That makes perfect sense, Bruce. But you know what most people don't have?
What's that?
Money to pay their tax in the first place. That's why they.
Oh God, that happened to me this year. I had a guy that he said, oh yeah, I'm finishing my taxes right now, self-employed, and I'm going to show this much money. I said, if you're going to use that tax return, you have to pay the taxes on it. He goes, no problem. I looked at his bank statements. I went, you got $3,200 in the bank to your name and you owe $9,700 in taxes.
Yeah.
I don't see where the money's coming from.
Yeah, exactly.
I'll go on a payment plan.
All right.
Like, oh boy.
All right. So if you need to reach me, call me 407-352-8118 or go to cleveloveland.com. Bruce, your number?
Yeah. If you want the loan arranger, you want a great mortgage, purchase, refinance, home equity line of credit, reverse mortgages, construction loans, renovation loans, you name it. I got it. I service them in-house. Everything's done in-house. You can reach me at webringyouhome.com or 407-250-9144. I celebrated my 36th year on March 19th. 36 years.
And you're talking about in the mortgage business, not with your wife.
Wife was on the 19th at 32 years.
Okay. All right.
So I had 4 years on.
I heard the Pope's putting her up for sainthood.
I'll tell you what, she should be putting up with me for that long.
Yep. I want to talk. The last part of the show here, Bruce. Let's talk new construction.
Yeah, let's do it.
I went through a great community in Claremont, homes starting. And what's nice, Bruce, is it's right past Oakland before you get into downtown Claremont. So you're 10 minutes from the turnpike and getting over to the Beltway system. If you need to get into town, you're outside of all the hustle and bustle in Claremont. 27 is getting really busy, but these homes start in the 5s. Beautifully appointed, 4 bedrooms, 2.5 baths. They got 2 and 3 car models. They actually got 3-bedroom homes with 3 car garages. That's after my own heart right there, that community. Great community center, walking trails, community resort center with community pool. And just from the average price, they said they're selling in the 6s, but just a great luxury home appointed. Call me if you want to take a look at that. 407-352-8118.
Yep. And we work with a lot of different builders. Don't go directly to the builder without your representation. You've got to get Cleve's team in there with you. Believe me, you're leaving money on the table. I see it all the time. And a lot of these builders will try to force you into using their own lender. Some of them will give you an option. Some of them won't. So you need a great mortgage. You call Bruce Woodburn, the loan arranger. I will make sure that you get.
Well, what's funny is that you're getting loans done there. They can't get done.
Well, all the time. And oftentimes we're a backup lender for a lot of these as well. They won't do the DSCRs and the bank statements. They don't have it. We generally take over for that. They want the meat and potatoes. So if you're FHA with a 620 credit score, you probably aren't going to go right to their mortgage company. They don't know how to fix your problems.
Yeah.
Or we can fix those problems.
That's right. You can tell somebody you're working with 2 of my employees now, and you got one 5 3/4 rate. Now, this is before the chaos.
Yep.
But in fact, you called her saying, lock it in. And she called me going, what do I do? I said, listen to Bruce.
I'll tell you what, we got that. And I try to do that with as many of my clients as I can. I can't lock your rate in without your permission.
Yep.
So if you don't answer and the market's moving, I can't help you with that. You have to answer. But in this case, I got on the phone. I saw the market shifting, and I was like, it was one of those almost a panic moment.
Yeah.
And I'm like, I need to call these clients that have not locked their rate in yet. And thank God your own employee came to me and I said, we got to do this right now. She goes, if you think we should do it.
Yep.
And I did it. And thank God I did, because oh boy, did they get hit. Now we're starting to come back. This week was a pretty good week in the bond market. I'm seeing some recovery, and it's a good sign. And I think it's because the market is starting to feel like we're going to get through.
Yeah, we will. We always do. It's funny how it's emotional reactions mostly. And then I guess actually the gas shortage is a problem, but that's going to pass.
It'll pass. But you know what? Gas prices right now are the same as they were when Biden was in, and the Democrats are screaming about it, but gas prices too high. I'm like, when Biden was in there, you know what they were telling us? Oh, they're not too high. Oh, the economy's doing great. It's your imagination. Oh, groceries aren't that high. You can afford them. You're doing great right now. They were just feeding us. They were gaslighting us. Now they're doing the opposite, even though the prices
they're not
are
too
really
happy. I enjoy watching the news nowadays. It's always fun to watch.
It irritates me. 407-250-9144 or webringyouhome.com for the Lone Ranger. You want to buy a home, you want to refinance it, you want to build a new one, you want to reverse mortgage. Maybe you're getting up there and you don't want a mortgage payment. Reverse mortgage may be your thing. Maybe you need to pull out money to consolidate debt. How about a debt consolidation, a refinance transaction? I've got a client right now. He has to pay $200,000 off to a family member. So I'm refinancing his house. He wanted a home equity line. It was cheaper for him to refinance the house and put it all in one. So all of these things we will customize a loan to meet your needs. And if you're a young folks, here's the deal. Right now, young folks that want to buy, now is the opportune time to jump in the market. Don't go, it's not opportune, Bruce, because interest rates went up. That's why it's an opportune time for a buyer.
Yeah.
So I want to talk about this. I know why it's good for a buyer, because it's less competition in the market, more homes available. Sellers are sitting on their homes longer, so they're more willing to make a deal. What do we do from the opposite side, from the seller? So how do you have those conversations with your seller going, hey, look at John and Mary. This house is, the average in this neighborhood is 88 days on the market. What do you do? What do you do to help them feel comfortable with the process?
Everybody's market is personal to them. So I've got to see. And what I watch when I list somebody, I'm always the eternal optimist. I want to list them as high as I can, but you got to have sales to base that on. And yes, okay, all right, you've got an extra garage. That's $5,000, not 50.
Right.
You got a nice pool. Okay, that's an extra $10,000, not 100. So all these things come into play. But what I do is I sit down with them. You know how you tell if they're at the right price?
What's that?
They get a contract.
Yeah.
And if you don't get a contract and a couple of your neighbors did, and you didn't get it, why was that? Was it because they were easier to show? You only let the house be shown on 2 days a week because you got 3 Rottweilers? Was it because you need to paint the inside, or it looks like you're having a flea
declutter?
Your house looks like a flea market? Is it staged? Does your yard look like a tornado went through it?
Yep.
All of these things come into play, but I can show my sellers. I usually get them to a baseline, okay, looking good, spending as little money as possible.
Sure.
And then I can say, all right, they didn't sell, you did. Let's adjust a little bit.
Find out why.
And I can tell you whether that needs to be 2% or 4%. It's up to the seller. I leave it up to them. But you and I don't control the market. The seller and I don't control the market. If we're at the right price, the market will tell us by getting us an offer.
Now, but when you have that conversation right now, oh my gosh, we are running out of time, buddy.
Right.
So if you got questions for Cleve about how long it's going to take him to sell your house, call Cleve at 407-352-8118 or get your loan started right now with Bruce Woodburn, the Lone Ranger Cross Country Mortgage. I'm right here in your backyard, friends, and it'd be an honor to serve your needs. 407-250-9144 or webringyouhome.com. Have a great weekend.